Absolutely. Let's go, Ken. Absolutely. Okay. All right.
I've lost Travis. I'd like to introduce right now Brenda Gallant, she's an RN, which is a really dignified title, but even more so, she's the head of the director of the Long-Term Care Omsbuderson program for the state of Maine. And for those of you who aren't sure what that means, neither am I. But it's looking over to make sure that the long-term care programs in Maine are run in proper fashion. So Brenda, I'll let you take it over.
All right. Thank you very much. I'm pleased to be here to tell you about the Long-Term Care Ombudsman Program. And I've been with the program now for, hate to say it, 20 years because it is a really wonderful program. There's continual challenges in doing the work, and every day we make an enormous difference to many families and long-term care consumers across the state. I'll describe the kinds of help that we give to long-term care consumers and also tell you about two initiatives that we're very actively involved with. One is the Maine partnership to improve dementia care in nursing homes, and the other is Money Follows the Person. And that's a program that was begun within the last year that helps nursing home residents transition out into the community so that they can be independent. So the Ombudsman program exists in every state. The federal and state law require that we provide advocacy for consumers in all long-term care settings. So we serve people in 107 nursing homes here in the state, residential care, assisted living, and home care. Our services are free and confidential, and we help people with any problem at all that concerns them. It could be a quality of life issue, quality of care, payment, discharge, a conflict with the provider, any issue at all that concerns them. With their consent or the consent of their guardian, we will step in and resolve the problem. And we get excellent results when we are asked to assist. We do a lot with respect to legislative advocacy. We've worked on a number of pieces of legislation to improve long-term care services. We worked on staffing ratios in Maine nursing homes, and that was inspired by direct care workers who came to me and said, and this was back in the 90s when the medical eligibility in nursing homes was raised significantly, and it really put pressure on the staff. And they were very concerned about the numbers of residents that they were being asked to take care of. So they came to me and to a legislator and asked for our intervention. And after 7 years of work with them and with legislators, we were able to get much better staffing requirements in Maine nursing homes. And the result is that our survey deficiencies are much lower than in other states, I'm pleased to say. We cover 355 long-term care facilities across the state, and we're only able to do that because we have 65 volunteers who enable us to establish and maintain a presence in all of those facilities. We must be in them at least quarterly, and then more frequently if there are care issues that are identified. Our volunteers come to us from all walks of life. We have people with healthcare backgrounds. We have an attorney, Misha Pride is one of our volunteers, a new one. We have teachers and business people, and what they all have in common is a tremendous dedication to the work. They're willing to go through extensive training, and they are incredible people, and some of them have been with us as long as 15 years. And some of them have complaint investigation training so they can assist with more complex issues. All of our staff, which I really feel proud of, provide direct service, including myself. I just have one finance person that doesn't. So our dollars go into direct service. So we have our volunteers in facilities, which is a very effective form of outreach. We try to reach people at every point. When they have an assessment, they're told about us. If they are referred to the Home Care Coordination Agency for the state, Elder Independence of Maine, they get information about us then. If they get a reduction, denial, or termination notice, they are told about us. We try everything possible. The home care regulations require that people have information about us, and the facilities must provide information upon admission. Okay, now with respect to the problems that are brought to us, as I said, we get involved with anything that concerns the consumer. And sometimes something that's relatively small and can be easily, fixed, still can cause a huge problem with respect to services. In this first situation, there was a gentleman in his 50s with ALS, and he was at home and his wife was taking care of him, and his care needs progressed significantly to the point that his wife really needed some assistance in keeping him at home. And so he qualified for a Maine Care funded home care program, but the problem was he couldn't afford it because the DH worker had not calculated the copay correctly. And so that meant he couldn't afford the care, but he wanted to stay in the community. And so they found their way to us, and Pam Marshall, who's sitting here in the audience, worked with the family, looked at the income and expenses, and looked at the rules around the calculation of the copay, cost of care. And so she went back to the DHS worker and said, you need to correct that. And so that was a great remedy, so he's at home and getting the services that he needs. We had another gentleman with a traumatic brain injury who could not find a facility in Maine who would take care of him. And so for 10 years, he was living out of state in a facility at a greater cost, and it was at least a 4-hour ride for his family to visit him. Over the years, the family tried to get some help to bring him back. They were unsuccessful. They found their way to us, and again, Pam intervened and got him back to Maine, got him reassessed, and found a facility for him to live in so he could be close to his family. In another situation, I had a woman come to me who was probably one of the bravest people I've ever met. She was taking care of her husband at home. Again, he had ALS. She was working full-time. They had a small child. It was really difficult for her to deal with his illness and understanding what the outcome would be. And he had Maine Care services during the day, but no home care at night. So she would be up all night sleeping in a recliner in his bedroom with him, and she was just exhausted. So she came to me, and I went to the Department of Health and Human Services, and I said, there's no nursing home that will take this man because he was on a vent. This woman has no other alternative, and I'm just not going to leave this office until we come up with an alternative. And so what they did was they created an exception to the home-based care state-funded program to give some funding for nighttime care for this man. Oftentimes, we are the first to know when there's a boarding home or nursing home that is providing substandard care. In the last year, there have been 2 residential care facilities in the state that we have identified issues with respect to the quality of care and the services provided that were significant. And so we worked with the Department of Licensing and Regulatory Services so that they took action to create a remedy so that there were better conditions for the residents. When a facility closes, we go in immediately. We want to reassure people. We want to work with residents and families on transitions. The nursing home in Calais closed about a year ago. That was a big hardship to the community. It was the 3rd largest employer. They had over 91 jobs that were lost. And most unfortunate was that 26 residents had to move. Because we were involved, we prevented a move of residents outside their area. In fact, the day before they were going to close, I called just to double check, and they said, well, we have 2 people going to Bangor tomorrow. And I said, no, I don't think that's an acceptable outcome. And so I worked with them, and we were able to keep those residents in the area. Recently, you probably read in the paper, about St. Joseph's closing their residential care beds for renovation. We really wanted the residents to be able to remain there during that renovation, but it wasn't possible. And so 34 residents were carefully worked with their individual needs to make sure that they were able to move to another setting as close to their family as possible where they'd be well cared for. Recently, I got a call about a 100-year-old resident that would have had to move because the bed that she was in was changing from residential care to nursing facility level of care. However, she didn't qualify for nursing facility care. So the family was frantic and said, "What are we going to do?" And I said, "Well, let me see what I can do." So I talked with the commissioner's office. They made an exception so that she could stay there, and the facility accepted the lower rate of reimbursement. Okay, we'd work a lot with the legislature. We know that homemaker funding and home-based care funding is precious. There are waiting lists for those services. Right now, there are 1,772 people waiting for homemaker services, another 121 waiting for home-based care. So we worked with the legislature to allow the retention of these funds from one fiscal year to the next, so the funds would not be lost, and this allowed better management of the funds. Another rule change that we got was that when people were on home-based care, and they would, say, go into the hospital and then maybe go into a nursing home for skilled care and then return to the community, if their time out of the home-based care program was more than 30 days, they'd lose their placement and have to go on a waiting list. This was not a good thing, obviously, and it was a big problem for consumers. So we said that really needs to be extended, so we got it extended to 60 days. Okay, with respect to direct care staff, we know that they're underpaid, and so we worked with the legislature to require that whenever the nursing homes get an increase, whatever that percentage increase is must be passed on in wage increases for the direct care workers. We got the DHS commissioner to agree to make the exception. That was with the ALS gentleman that I spoke to you about before, to get the supplemental state payment for the nighttime care. So the other issue is that often people have to go out of the state to get certain kinds of services. For example, we're seeing a lot of people now that need bariatric care and vent care, and they have to go out of state. And so this is a shame. We should be providing care for these people in nursing homes in the state. So we've had conversations with the Department of Health and Human Services and with providers to work on reimbursement so that can happen. Now, whenever I think of long-term care, I think of the direct care workforce. And so every year, I send out nominations across the state to the home health agencies, nursing homes, residential care, and I say, tell us about your most outstanding worker. So they nominate workers, they send them in, we have a panel that evaluates all of the nominations, and we have the Excellence in Long-Term Care Awards at the Blaine House, and this is Mrs. LePage, who participates every year, and we do it at the Blaine House because it reflects the dignity of these workers. And this woman's name is Paula Campbell. She's been a worker for 20 years, and you can see, I picked this picture because she looks so happy. And just to point out, Maine's wages are the lowest in New England. Recently at the State House, I was on a commission for long-term care. I invited 2 CNAs to come and testify, and one of them said she makes $10.08 an hour, and she can't afford to put oil in her oil tank or fix her roof, so she's leaving to be a paralegal. So I just want to say we're very aware of the long-term care workforce and their needs and their importance. Now, one of the things that we do is outreach to the community. So now this report is on our website, and at the end I'll give you the address. So what we decided to do was to reach out to 8 Maine communities and to meet with them and talk with them about long-term care services and supports. We wanted to know about their opinions about access, gaps in services. What were their ideas about how services could be improved? What would be needed to support people in remaining in their home? Their quality of life concerns, and also about the care that they receive from physicians. Maine Health Access Foundation provided funding for this project, and we held listening sessions in towns you typically don't go to. Lewiston was added by Senator Craven, who's the chair of the Health and Human Services Committee, because she wanted to make sure that she had one in her town. And Muskie worked with me on developing the questions, the format, and compiling the report. We tried everything to do outreach, and we had a huge campaign using all of the agencies within the Aging Network to get the word out. And we sent out about 400 postcards to consumers, and then I called numerous people, reached out to churches, and so it was just a huge effort to get people there. And we invited, you can see the broad array of people. Now, I invited legislators, and we had a handful that came because it's so important for them to meet with families. And one of the family members actually brought her son, who's comatose. She brought him to the meeting and described her challenges in taking care of him. Now, that legislator did not forget meeting this woman and hearing about her challenges. So we invited legislators. I called them, emailed them, and as I said, a handful showed up. The DHS had new leadership. They came, so they learned and made some very good connections. I invited town managers, and one of them said, well, I'm new, I don't know anything about it. And I said, well, come and you'll learn about your community. So we had small group discussions with very specific questions that covered all the areas that I told you about before. We had about 230 people who came, and we asked them to, after the discussion, just to write down on a note card, what was the most important thing they wanted us to know for those people who might have been reluctant to speak up. The most prominent theme is not surprising. People want to be in their homes and in their communities whenever they can be. They want their communities to step up to the plate, support them, and be creative with their solutions. They're concerned about sustainability of funding. They're worried about those people that are just above the poverty level, that can't afford, that might not be able to qualify for Maine care, but can't afford to pay for services. But they want to be home, and they're concerned about staff. Transportation, we know, has been historically an issue that has been a problem that doesn't seem to improve. And people are concerned that without transportation, that inhibits their ability to remain independent. They're concerned about workforce and all the things that we're concerned about. They talked about no-shows, which we see a lot around complaints with respect to home care, that does happen all too frequently. They talked about staffing in nursing homes needing to be better, and a concern for the workers and a satisfaction with the workers that they do have. People want a guide. They really do, and I know when they come to us, and Lynn certainly before me talked about it as well, this is a complex, convoluted system. When it works, it usually works pretty well, but when there's a problem, it is horrendous for families, and they just need someone to take their hand, reassure them, and walk them through, and people recognize that there needs to be more help and more information and guidance through the system. Family support, we know, is another critical issue. People want respite, pay if they have to give up a job, and caregiver burnout, and just general support for family caregivers. And then housing. I served on the Blue Ribbon Commission for Housing, and one of the things we talked about was the fact that the waiting list for subsidized housing in the state are from 3 months to 3 years. So it is a huge barrier. It's a huge barrier for people who want to leave facilities, or those who want to remain in the community. And then people talked about poverty. Older people not being able to afford food and medications, and rationing medications because of the lack of funds. Okay, now, the great thing that I loved about these listening sessions was that every community had its own personality. And for example, I met a group in Bucksport, citizen-initiated group that established the Bucksport Bay Healthy Communities Coalition. Grant-funded, volunteer-staffed. They have done incredible things in this town. They are wonderful. They improved transportation. They started an assisted living program. They established an adult day health services program, which didn't survive only because of funding is not adequate for those services. And now, most recently, they received a Thriving in Place grant provided through Maine Health Access Foundation, and we're one of the partners. They are a wonderful group. If they can do it, other communities can too. And I'd like to see more grassroots stepping up to support elders and adults with disabilities. Okay, now I'm going to jump to another thing. Improving dementia care. I see Dr. Fazeli out in the audience, excuse me. Yeah, you need to get back there. I know, so much to say. Okay, well, he's one of the partners in this. Okay, what happened was CMS is concerned about the use of antipsychotic medications in nursing homes. So they established an initiative to reduce the percentage use of these drugs by 15%. And so I and Holly Harmon from the Maine Healthcare Association, she's also president of the Maine Culture Change Coalition, and I got together and we started this coalition, and Dr. Fazeli is a very active member of it. And we've been meeting for about a year now. And you can see we have many partners in this statewide coalition. And our goal is to provide support to nursing facilities so that they will have the training and support to reduce the use of these medications, which when they're not used appropriately can have many side effects and problems. And you can see. So we started with a training conference, and we just put donations together and had a day-long conference. We had over 200 caregivers. We had Dr. Wary, geriatric psychiatrist, is nationally known, who talked about alternatives to the use of antipsychotics and really talking about training, the need for training of direct care staff so that they understand that all behavior is communication and they can do a better job in terms of providing care to folks. We also had input from the Northeast Healthcare Quality Foundation. And they developed a training, those trainings were done for direct care staff, again, to help them better understand how to understand behavior, to respond when residents may seem difficult to provide care for when they have a dementia. And so these trainings were done across the state. We had a great response to it. They really welcomed the information and the training. So now, because the training was such a success, we're training some of our ombudsman volunteers to go out and provide the training in facilities. And nursing home staff are also getting the trainer training. Okay, so we developed a fact sheet for our families, which our staff and volunteers passed around, because one of the factors is sometimes families are insistent that these medications be given, so the family education is critical. Now, get to the good part. What I love about this was with no money, but just goodwill, all of us pulling together, that Maine was the 4th most improved state in the country with respect to reduction of the use of antipsychotics. We were one of 11 states to have greater than the 15% goal that was established by CMS. So you can see we did the reduction by 17% for the period ending March 31st, 2013. And what I just love is Lakewood in Waterville has 0 use. Durgan Pines, it went to 0. We have another facility that reduced their use by 70%. So now with continue
So she's very good at being self-advocate, and I never forget that moment, so, like, holy smokes, you're very good, you know, and so she was the one, anyways, who kept having community accounts, and we had some tough barriers in terms of, skepticism or concern of regulars, the more we listened to Cindy, the clearer it was that she could do it, she was right.
Last call for the 3:15 session with Genworth. We'll start in just a couple minutes. Thank you for being here for our last session of the day, and I hope you'll stick around for the wrap-up with a few discussions on exactly what the problems are that we're trying to solve. Right now, Jerry Larkin of Genworth Financial is going to give a presentation which I've been looking forward to for a long time because actually when I was putting together the conference, I desperately wanted to get Genworth Financial involved because some of their studies here in Maine they do it religiously every year, and they're real interesting information. But I couldn't find anybody, and lo and behold, my good friend Dan Doherty of Edward Jones, he says, well, how about if we bring in Genworth Financial? So, it was like, it happens. So I want to thank Dan for his efforts, and I'll leave it up to you to do the rest.
There we go. Well, thank you for having me. I'm excited to be here. I see my reputation has preceded me by the crowd as it's thinned, and everybody heard I was going to be up last, but I am very excited to be here. I apologize if I look a little bit ragged. I flew in from Richmond this morning. I took a 5:45 a.m. flight, which always seems like 2 weeks out when you're booking it. That's not such a bad thing, it's a little early, but that's okay, until the night before, and then you say, okay, so that would be at the airport at 4:45. It means I got to leave the house at 4:15. I got to be up at 3:30. Okay, well, that's good. I'll just go to bed early until my 3-year-old he's weaning himself from his nap, but not yesterday. He decides he's going to take a 3-hour nap yesterday, won't go to sleep until around 11:30. So it was a bit of a shorter night than I would have expected. But I'm really am glad to be here. And thank you, Ken, for the introduction. A couple of things. First, I am not going to try to sell you any insurance. Second thing, what I can't do is I can't solve, we've spent a lot of time talking today about people who need care today, or who are receiving care today. I can't help you if you already are receiving care or need care. But what I do want to talk about is planning for that care, and I think by planning, you can help solve for a lot of what was discussed today in terms of the issues that are facing people as they go into long-term care. And so I really want to talk about what that looks like and what the options are. And I'll make one disclaimer. This is me standing on the first tee and telling you that my back hurts before I hit the first shot. But what I do want to share is certainly there's a lot of expertise out here in the audience. And much of what I'm going to talk about is going to seem very rudimentary. But by way of example, I like to coach youth sports. I love youth sports, passionate believer in youth sports. And when my oldest son was 4, we got him into soccer. I know nothing about soccer. I played baseball, football, basketball. I could coach any one of those all day long. I'm good. They need coaches for soccer, and so I said, sure, I'll give that a try. Why not? I don't know anything about it. That makes me perfectly qualified, right? So I get my kids out, and I'm coaching them on the field, and we have our first couple of practices, and we get to our first game, and we're playing against a bunch of older kids, and about 3 minutes in, we're behind probably 4 goals to 0, which I don't care if we win or lose. You know, that's 4-year-old soccer. They're just amoebas running around the field, right? Well, my kids come over to me, and they say, Coach, he took that ball away from me. And when they had the ball, then the kid from the other team would be standing there. They'd go, here you go, and give it to him. Their entire lives, they've been taught to share. They've been taught not to take things away. So when the other kid was coming by, they're like, here you go. I can't take that ball away. So there was a little bit of background that I hadn't shared with them, some fundamental things that they hadn't talked about. Well, later in the game, my assistant coach was talking to him. He's giving him a pep talk at halftime, and he's down on one knee. All right, guys, come here. Gather around. So we're all, picture these 4-year-old kids, boys and girls, all in there like the coach is just going to reveal the secret to life, and they're all excited about it. Okay, we got to do a better job playing defense. And on offense, we got to look for some passes. And he keeps going. And one of them says, Coach, what's defense? Well, I use that example because what I'm hoping that I can share with you, while it may be rudimentary for you, what is success for me is if you go out and start talking about and spreading the word about planning for long-term care. And what I hope I can share with you is some ways that you can talk about it. I tend to do it, and I think probably many of us do, we tend to talk to people as if they know about it. But you will find, and we've done a lot of studies about this, that one of the least understood aspects of aging is long-term care. What it is, what it means, all those kind of things. So I hope that even if you're looking at one of these slides or some of the information and saying, oh my gosh, this is 101, it is. Because this presentation is actually intended to be delivered to potential insurance buyers or people who are interested in learning about planning. But I hope you can see some language that you can use to help people start to have the conversation. And I think you'll see how that plays out a little bit more. So setting a goal is not the main thing. It is deciding how you will go about achieving it and staying with that plan. Tom Landry, whether you like him or not, great coach and certainly big on execution. And we're going to be talking about planning. That's the entire point. If you take nothing else away from my talk today, planning. How important it is to plan for long-term care. So what does it look like to be able to win in the second half of your life? Priorities. Genworth has done a lot of research, and we partnered with AgeWave. Many of you have probably heard of AgeWave, Ken Dykewald's organization. And we've done some attitudinal studies about people and seniors and how they age and how they tend to spend their retirement. And there were some fascinating things. I could talk for an hour and a half on just what we learned from that study. But one of the things that we saw in that study is people don't fear dying. They were given a list of things and asked to rank them. Dying is pretty low on the list. Number 1 and 2, becoming a burden on my family and outliving my money. Those are the number 1 and 2 things people worry about in retirement. Dying, distant, I think number 6 out of 10 or something like that, maybe 7. Certainly not near the top. And so when people are talking about their priorities in retirement, so one, protecting my family against the financial impact of a long-term care event, they probably wouldn't phrase it that way, but that's what they're saying when I was saying, I don't want to be a burden on my kids. Having enough income to sustain my lifestyle and handling unexpected medical expenses. If you ask people what their biggest fear is financially in retirement, medical expenses. And there are a bunch of studies, and the numbers are kind of a little bit here and there, but something on the order of 70 to 80% of your medical expenses are occurred in your last year of your life. Your entire lifetime medical expenses, the last year of your life. So people are afraid of that, and they know that's coming. They see those kind of numbers, and it scares them. And so a common challenge is extended care. Do you know anybody who needed long-term care? Who knows anybody who needed long-term care? I'd be stunned if anybody's hand doesn't go up. But if you ask the general population how many people, most people will raise their hand. But the second question is, do you believe you could need long-term care? It's stunning to me how few people will actually raise their hand. I mean, my plan, I'm sure all of our plans are the same. I plan to live a happy, healthy life, and one day after a great round of golf or maybe a day out water skiing, I'm going to die in my sleep. Everybody on board? Wouldn't that be great? You know how many people that happens to? Fewer than 2% actually live a reasonably healthy life with minimal impact to their lifestyle from a health perspective and die in their sleep. So it happens. I know this is stunning news, right? People are living longer. I wish I could have used this other graph, but it's a great one. It's tracking the life expectancy of the human population since like 1,000 years before Christ. And what it looks like is one big flat line, the last bar sticks way up. Because the average lifespan was about 20 years for most of history, most of recorded history. I don't know who the actuaries were who were recording the lifespan, by the way, in 1000 BC, but I've seen this graph and it's pretty impactful. But we are aging. And the reality of living a long life is, the longer you live, the more likely it is that you may need some type of care. I don't think anybody can disagree with that statement reasonably. There's certainly people who are in denial about it. I know I'm invincible, but there are certainly, it's very difficult for somebody to disagree with that statement. And so there's a lot of things you need to think about. When I live longer, does that necessarily mean I live as healthy and robust and independently as I am now? So we have to talk about planning for long-term care. So first of all, defining long-term care. One of the easiest ways to talk about what long-term care is thinking about what did you do today when you got up. First 45 minutes of your day, every day, defines what long-term care is and living independently versus needing some care. So when you woke up, were you dry? Continence is one of those activities of daily living. It's the only one that's not really an activity, but they count it as an activity of daily living when you're discussing long-term care. So if you were dry, you probably then got up, went to the bathroom. You transferred, and you toileted. Then you showered, then you got dressed, then you went to the kitchen and you ate breakfast. If you did all those things successfully, congratulations, you've achieved all of your activities of daily living. Oh, by the way, I'm assuming that you did that without any cognitive impairment as well, because cognitive impairment is a bit of a separate category when you're thinking about long-term care and how it's defined both legislatively and from an insurance perspective. But those are ways that you can think about what long-term care is. Can you do all those things independently, or do you need help? And so when you're thinking about that type of long-term care, if you need help with those activities, you can receive that help anywhere. It can be in your house. It can be in an adult daycare facility, assisted living, all the way up to a skilled nursing facility. And of course, I'm sure you're aware as well of some of the other communities that are cropping up, the continuing care retirement communities, the sort of evolve from the apartment to the assisted living nursing facility where you get to stay in the same community. There's a lot of different places that you can receive care, but all of them is long-term care. So a lot of people, when they hear long-term care, first thing they think about, nursing home. That's what it is. Happy, healthy until I need care, then I go straight to the nursing home. That's not the case. When you need help, you can get help where and when you need it. So what's the likelihood of needing it? There's a bunch of different numbers that are thrown around, but this is a pretty reliable one. 70% of people who reach the age of 65 will need some kind of long-term care. So pretty high likelihood that you are going to need that care. We're not all going to be invincible and use that same retirement plan that I have or that end-of-life plan that I have to die healthy in your sleep, right? So the second number is based on Genworth claims data. And what we've seen over 40 years of paying claims is that if you have a long-term care event that lasts 1 year, the average length that that care event is going to last is 3.9 years. And it's a very bimodal distribution, which basically means there's two humps on the graph. People get sick, they get some kind of acute illness, and they don't last very long, they need some care, and then they die, or they get better. But the ones that last longer, now you've got the second hump right around 3.94 years. So people need 4 years of care. If you get an Alzheimer's diagnosis, your life expectancy at that point is about 4 to 8 years, but it certainly can be a lot longer. Our longest claim is an Alzheimer's claim that is not accident related, and it's 14 years and still going. So you can live a long time with that diagnosis and be needing that care. So there's the likelihood of needing it and how long it's going to last. How much does it cost? The median care in the United States for this year, and I'm also going to show what it projects out at 20 years. I'm just going to focus right now with the nursing home. A private room in a nursing home in excess of $80,000. In Maine, that number is $106,000. For in-home care, the numbers it's about 5,000 more. So for a home health aide, the average is 50,000. And what we do, Genworth goes out, Ken made reference to this, we go out every year and we conduct what we call the cost of care study. And we survey thousands of long-term care facilities and care providing organizations. And we aggregate that data, and I'll show you this in a minute, what it actually looks like. But we aggregate that data for each state and even certain areas within the state, so you can see what the actual cost of care is. Another fact, if you ask a group of people who are not experts in the industry, what does long-term care cost? They will typically underestimate it by more than 50%. So let's just say a nursing home is $84,000, they'll guess $30,000 to $40,000 a year for a nursing home, if that. So they don't appreciate how likely they are to need it, and they don't know how much it costs. But think about, now you're in Maine and you've got a portfolio, your retirement portfolio, you think you're feeling very comfortable, you've got $1 million in your portfolio, now you've got an Alzheimer's diagnosis and you're looking into potentially $100,000 plus per year for care. How quickly can you burn through that portfolio and through that money? Projected out, and it's been going up actually 6% per year in Maine, so this is a bit conservative, but that 100,000 goes up to 250,000, actually 270,000, so over $250,000 a year for care 20 years from now. So somebody healthy who needs that care is going to be paying $250,000 a year. That creates a little bit of sticker shock. And when you're having that conversation with somebody, that's a very important moment. This is a very difficult conversation to have, but you need to create that factor that you need to scare people a little bit that they understand sometimes in order to get them to think about planning. I'm not suggesting you go out and scare them, try to do it. Hey, lead with that one. Did you know it could cost you $750,000 a year in a nursing home if you 20 years from now? It's probably not the right way to initiate the conversation, but they do need to appreciate the magnitude of what they're looking into because people don't act. On average, it takes a person from the time they begin to investigate seriously long-term care insurance or a long-term care plan, it takes them over 6 years before they make a decision on a purchase. And I'll talk about the risks about that in just a minute. So here's what the cost of care study looks like. And this is a really cool online tool that you can use. So I'm going to just show you. If you go to a website, genworth.com/cost-of-care, if I can get this mouse to come up. Whoop. I'm going to go back a slide. I can click on Maine. It will bring up an interactive map. And when I click on Maine, now what it gives me is, here's the average, and I can select what time period you want to look at. Daily, monthly, annually, what it costs. And then what our survey says the actual costs are. So we're looking at, on an annual basis, what does it cost for homemaker services? What does it cost for a home health aide, adult daycare, private one-bedroom? You can forecast it out into the future, so calculate future costs, and you can say, when do you think you might need care? 10 years, 15 years, 30 years? And it will inflate it by 5%. The other thing that it does for every state is we even aggregate data for some of the more population-dense areas, so you can see, is that different? Now, for those of you who are in Maine, I heard earlier that many of the people from Maine are retiring to Arizona where it's warm. For the other ones who think Maine winters aren't quite harsh enough, I'm going to go to Alaska. That's where I'm going to plan my retirement. If you need care, that's a bad plan. Cost of care in Alaska right now, a private room in a nursing home is over $200,000. You think that care provider availability is tough here? Alaska, and that's why. The demand is high, and the availability of care providers is very low. So it's extremely expensive. It's the most expensive state in the nation for long-term care. But I certainly encourage you to look at this, because it's a great tool, and again, you can pick whatever state you want. And so if you're planning to retire somewhere besides Maine, or you have relatives wherever, you can point them and they can start to see what the actual costs of care are and what they're projected to be. So I will skim through these because you've seen the actual numbers, but you can get an idea of where the costs are highest based on the darkness of the color. So that's what it costs financially, but what are the impacts now to the family? And the question to be asked is, who is actually going to take care of me? And when you ask people, if you did need care, I know you're not going to, because we all believe we're invincible. I know you're not going to, but if you did, who would take care of you? Two answers are my spouse or my kids. So I'm going to use my parents as an example. My mom is 76. She has COPD. My dad's 75. My mom's a cradle robber. We tell her that all the time. So the cradle robber has COPD. She needs full-time oxygen. My dad has had 2 heart attacks. He's in great health otherwise, strong, goes fishing in Canada 2 or 3 times a year, plays golf just about every day, but he's had 2 heart attacks, and he can take very good care of her, and he does, and I so appreciate that. What terrifies me to my core and literally wakes me up at night is the thought that someday I could get a call saying, Dad's had a stroke, and he's going to need care. There's no way my mom could do anything to care for him. She can't walk from the kitchen to the other room without oxygen. When she walks up a flight of stairs, she has to go halfway and rest for 5 minutes before she can go up the rest of the way. So now there's 2 parents that need care. So the spouse may be an option now. My wife right now, if I needed care, she could absolutely take care of me. But when I need it, is she going to be able to? Now let's talk about the kids. It's my brother and me. We're the only 2. My parents live in Wisconsin. I live in Virginia. My brother lives in Oregon. We're not really much of an option without a major disruption in our lives. That means our parents move in with us, or move to be near us, or we have to move there to take care of them. Or we're on the hook financially for those costs that we talked about before. So there's a significant impact to the family, and even though people don't believe that they want to be a burden to their family, they think care brings them together. How many of you have seen an example where providing care for mom and dad has brought a family closer together? See, I can ask this question in here because you're all experts and you know exactly what happens when a family tries to provide care. My mom, I use her as an example again, her dad died of emphysema. He was in a nursing home for 4 years before he died. She has 1 older sister and 1 older brother. They got in a fight about money, providing care, because my mom was in Wisconsin, my grandparents were in Texas, my aunt was in California. They got in a fight about providing money because the sister, my mom's sister, was sure that my grandfather's new wife, my mom's mom had passed away, my grandmother passed away, was sure that she was actually taking the money and not actually using it for the nursing home. So she's decided that she's going to cut him off. Of course, my parents decide they're not going to do that. This results in a huge fight because now my parents are on the hook for much more money. They're both educators. My aunt was very financially well-to-do, and she's the one cutting him off. They didn't speak for years and years and years. Every once in a while, there would be a reconciliation. It would last about a month. My aunt passed away of breast cancer. My mom didn't know she was sick until the day before she died, when I called my cousin, because my mom was very upset after my aunt died and was trying to decide what to do. I called my cousin and said, Tommy, Mom's really broken up. I'm trying to guide her on what to do, whether she should come out for the funeral, any of that kind of thing. My cousin said, I'm really glad you called, because my dad intends to honor my mom's wishes, which is that your mom not be allowed to attend the funeral. This long-term care event drove a wedge between them so deep that my aunt's dying wish is that her sister not attend her funeral. And that's not that atypical a story. Now, granted, my family can hold a grudge like nobody's business, so that's kind of major league class status, but it doesn't draw families together. The kids who are far away are bitter because they're having to pay. The kids who are there actually providing care are bitter because they feel like they're taking on the lion's share of the burden. It does not bring families closer together. So it is critical that people plan for care. So how would you pay for it? We got all these assets that we plan for our retirement income so we don't outlive our income. But there's this looming, huge expense that could decimate all those assets, long-term care. You know what the options are. Private family support, so I can pay for my parents' care. That's not easy for me to do right now. It would mean a significant lifestyle adjustment for me and my family, if we could even afford it, depending on the care they needed. Public programs. You would be very surprised at how misunderstood public funding is. People think Medicare pays for long-term care. It does. For how long? 100 days? Yeah. 100 days, and then you get another, but not even all of that is fully funded. And there's a requirement before it, and it has to be in a nursing home. Medicaid, of course, that's one we're all entitled to, right? That's what people think. When you tell them that you have to spend your assets first, and you tell them what you need to spend your assets down to qualify for Medicaid, they don't believe you. But they do believe that those programs are there for them, just like Medicare is there for their health insurance. They don't differentiate between long-term care and health insurance. Most misunderstood aspect of long-term care is what will pay for it, because almost everybody believes the government will pay for something for it. Or I can self-fund. For most people, the most efficient option is going to be long-term care insurance. And why you have to plan for it is, I would bet that most of the people in the room right here could qualify for long-term care insurance. What people want is for it to be like health insurance, and they want the health insurance companies to take a pre-existing condition. But it doesn't happen. There's not one long-term care insurance, private long-term care insurance carrier that will offer coverage to somebody who already has a care need. They can't afford to do it and stay in the business. The policies couldn't be affordable for everybody, so they can't do it. So you've got to plan ahead in order to even qualify for it. We have a saying, money pays for it, but health buys it. You need to be planning for it when you're healthy so that you can qualify for that insurance, because you will find it will be a much more efficient way to fund it. In almost every case, your premiums, 1 year of premiums for insurance will be less than, your entire lifetime of premiums will be less than 1 year of care, should you need it. So there's traditional long-term care insurance. That's you buy a policy. If you need care, it pays. If you don't need care, it's a use it or lose it type of insurance, just like term life insurance. If you die, it pays. If you don't, it doesn't. There are some other products that are out there that you may have heard of that are options for people. One is an accelerated benefit rider. So you buy a life insurance policy, and let's just say I've got $200,000 of death benefit. What this does is it allows me to access that death benefit if I need long-term care. It's called a chronic care rider. So I can access some of that money from that life insurance contract. Or the last, what we call linked benefit solution, that's a also a life insurance contract, but it works two ways for long-term care. First, let's just say, for argument's sake, I'm talking with somebody and they have set aside a little bit of money. They've got it sitting in a CD, in their mattress, in a savings account, something. Call it $50,000, maybe $100,000. What's that for? Well, that's kind of my emergency fund. What kind of emergencies are you thinking about? Well, medical expenses. Huh. What are you going to do with that if you don't need it? I'm going to leave it to my grandchildren, to my church, to my heirs, whatever my estate plan. Okay, what if we take that money and we buy a life insurance policy with it? We put $100,000 in, immediately you get a $200,000 death benefit. You die tomorrow, you doubled it. Oh, by the way, when that life insurance policy pays out to your heirs, because you said you wanted it to, they don't pay taxes on it. If you leave them $100,000 in cash, they're going to get taxed. So your life insurance policy just paid out double tax-free. But if you need it for long-term care, first, you can use up your death benefit. And if you still need care after you've used up the death benefit, the insurance company is going to multiply it again to add maybe another $400,000. So you have access to $600,000 of long-term care benefit should you need it. If you don't need it, you got a $200,000 death benefit. And if you need the cash, you can cash the life insurance policy back out. So for people who have that emergency fund sitting there, it can be a very efficient vehicle, and they don't use it or lose it. So there are options out there in the industry besides just standalone long-term care insurance. And that's a way for them to transfer that risk, because still, if I plunk that $100,000 into a linked benefit plan, it's still less than I'm going to pay for 1 year of care in a private room in a nursing home, 2 years of care in just about any other setting. So it can be a much more efficient way for people to protect against the risk. So what we tell people is you have to have the conversation. There are two, probably multiple conversations in one front, but there's two conversations that you have to have. One is with your family. And you don't just say, what are we going to do if we need care? Okay, my wife and I, we have the conversation. Here's what we're going to do. We're agreed. Yep, great. We high-five each other. We're done. You've got to write it down. And you need to talk to not just the spouse, but the kids. The other person you need to talk to is Dan Doherty, a financial professional who can help identify what your options are and what might be the most efficient way for you to plan. A perfectly legitimate plan for long-term care is, first thing I'm going to do is I'm going to sell the beach house. Next thing I'm going to do is sell this mutual fund. Next thing I'm going to do is I'm going to cash in this life insurance policy. The last thing I'm going to do is I'm going to take a reverse mortgage out of my home. That is a legitimate long-term care insurance plan. Dan needs to know that. Your financial professional needs to know that. Because when my dad has a stroke, and my mom, she's an English teacher, she still believes 2 times 0 is 2. She wants nothing to do with the finances. I'm not lying either. She does believe 2 times 0 is 2. So she wants nothing to do with that. If my dad hasn't had a conversation with his financial planner, if Dan doesn't know what my dad's intentions are to pay for his care, and my dad's no longer able to give us those directions, we're left to guess, and we have no idea what that plan is. But if he sat down with Dan, he's got a written plan, and he sat down with my mom and with me, and we've all talked about it, and we've reviewed what their plan is, and we've all agreed on it, we know exactly what's going to happen. And if you can take the financial equation out of the situation when somebody needs care, you have eliminated so much stress. So you've got to have the conversation, you've got to have a plan, and it's got to be written down. There's tons of information, and it's educational in nature. It's not intended to sell insurance, but you can have you can have documentation. This is a great way for people to come up and talk to their spouses, talk to their families, and say, you know what, I was reading this, and I think we should talk about it. Here, take a look. That's a pretty non-threatening way to initiate that conversation. But you have to have the conversation because nobody wants to talk about it. Hey, honey, let's talk about what's going to happen when I get so old I can't control my bladder anymore. Are you in? Nobody has that conversation. That conversation has never occurred, ever. So you need to have a way to have that conversation effectively. And there are lots of ways to do it, but there are tools that Dan has and that other financial professionals have that can help you have that conversation. And my plea to you all is that when you're talking to people about what you do and about long-term care and the crisis that we're facing with the aging of America and their finances, is to encourage them to plan as early as possible. I'm 44 years old. I've got a long-term care insurance policy that I've had in place for 8 years. I probably started earlier than most because I have a pretty passionate belief in it, but I'm not worried. If something happens to me, I at least know that I will be cared for and that I'm not going to have an undue impact on my finances and my family. So to be talking to them early is very important. So I don't have any more slides to show, but I do want to just share one other thing. I want to talk a little bit about the state of the industry and in particular legislation. The government agrees with me. Not really me so much as what I'm saying. But the government agrees that about the only way to solve this is for people to plan. The only solution the government has really come up with that's viable is for people to plan ahead. They've tried a number of different ways, and they've had to take some fairly drastic actions in order to provide for that. But at the federal level, there's been different pieces of legislation that's addressing what the impact of long-term care, those costs, are having. Everybody knows where Medicaid plans sit, right? Most Medicaid plans are bankrupt. They're in the red every single year, and the states are figuring out ways to supplement that with budgets from somewhere else, either raising taxes or having to cut programs like education and countless others, and we all fight that battle all the time. So the federal government, of course, is feeling it the same way. The Medicare program is feeling it. So they've taken a couple of actions. So the Deficit Reduction Act of 2005, that changed the Medicaid look-back period from 3 years to 5 years, added a bunch of other restrictions to it as well for the ability for people to access Medicaid. Because let's not kid ourselves, Medicaid was not intended for everybody. It was intended for the financially destitute. And it's a wonderful program, and I will never disparage Medicaid. I hope to never have to need it. But I'm so glad that it's there, and I'm so glad to live in a place that we have something like it. But it's in trouble. And the more people that plan, the better off the state Medicaid programs are going to be. So then came the Pension Protection Act of 2006. It created partnership. Anybody familiar with long-term care partnership? A couple of people? Here's the way long-term care partnership works in a nutshell. If you buy a qualified long-term care insurance policy for yourself, and then you need care, if the insurance company has paid dollars for your care, you get to protect that same amount of money from Medicaid spend-down requirements. So right now, the average is $2,000. I have to spend my assets down to $2,000 in order to qualify for Medicaid. If I buy a qualified long-term care insurance policy, and they pay $300,000 for my care before that policy runs out, now I get to protect $300,000 from Medicaid spend-down. I only need to spend my assets down to $300,000. The reason they're doing that is if you buy a long-term care insurance policy, the likelihood that you will need Medicaid if you need the benefits, let me make sure I'm making you understand the right audience here. If you buy that policy and you go on claim, there is less than a 1% chance that you will spend your money down and access the state's Medicaid plan. What that means is if you buy private insurance, you don't need Medicaid, and the states love that. So they're encouraging people to do that, and they're allowing you to protect assets from it. Anybody ever hear of the CLASS Act? Community Living Assistance Support Services Act. It was part of the Affordable Care Act initially, and it's been struck down because it's not affordable. It can't sustain itself. It was required to pay for itself. It was going to be a long-term care policy, and it wasn't going to be a very good one, but it was going to be long-term care insurance for everybody. It couldn't pay for itself. Health and Human Services looked at it every different way, and they found that they couldn't pay for it, so they cut it out of the legislation because it's just too expensive. People have to plan ahead. At the state level, the other one, and this was talked about earlier, the very first presentation. As part of the fiscal cliff, everybody remember the fiscal cliff? That was on the news for every day. There was a stopgap measure to create a long-term care commission, and that commission came back with some recommendations. You know what most of those recommendations involved? Planning. They came back with nothing that said we have a good idea for how we can fund this crisis, other than to encourage people to plan more. The states have gotten involved as well. Their participation in the partnership program, Maine has one. Not every state has it, but I think 36 or 37 have it. The other thing that they were doing was a co-funded program with the federal government called Own Your Future, where a letter would go out from the governor encouraging people to explore private long-term care insurance, encouraging them to plan and talk to a financial professional about long-term care. So they recognize the need. Nobody has a good solution for how we pay for this. And so there's crises all over the place. How do you receive care? Do we have enough caregivers? Do people recognize the need, and what is the impact, whether it's on the workplace or on people or on themselves or the family, and on the government, because we don't have enough money to pay for it. The only solution that solves for all of those needs is to plan for it. If you have the plan to be able to pay for it, now you will have access to caregivers, because you're going to be able to pay, and if you are able to pay, you're likely able to pay more than the less than minimum wage we heard about. So you will get access to caregivers. You get to control where you receive your care. You give up a lot of control if you haven't planned for care. So the need to plan is so important. And if you take anything away from what I've said today, the need to plan and to be talking to people about planning for long-term care is absolutely critical. It has to happen, or people find themselves in those situations where they don't have answers and they don't have options. Planning for it means that they do have options. Yes?
I planned a long-term care policy at 49, 5% compounded inflation rider, zero elimination, and $150 benefit a day. And now I've been notified by the state of Pennsylvania that the long-term care policy company is in receivership. And most likely my policy is going to get transferred to the state of Arizona to the Insurance Commission. And the total worth of my policy is $350,000. What guarantee can Genworth make to the public regarding your capacity to pay out on benefits 20 years from now?
Yeah, that's a great question, and I appreciate you asking that, because you're certainly not the first one to get that letter. There have been a few bad actors in the industry who wrote policies, underpriced them, and found out that their claims experience was way out of line with what they had priced the policies for, and they couldn't afford to pay those claims, and that's when a company goes into receivership. Receivership, by the way, is several layers down from where they start. So here's what I would say. I'll represent Genworth, but I actually believe that the carriers who are in the industry are very much about responsible planning and pricing, because there have been a number of insurance carriers who have exited, and I'm sure many of you have seen those. But the carriers that are left are committed to the industry, and they're doing the right things, sometimes unpopular. But Genworth, for example, has more experience than any other carrier in the industry. So we've got 40 years of data. We know what the loss experience looks like, and we know how to price more accurately versus what the loss experience is going to be. So we know that our pricing is more accurate than what we saw with some of those carriers that have exited the industry. The second thing is, when you price, and the states are wising up to it as well, they're holding us to a much higher standard. I can't sell a policy in any state without reviewing with them, here's what our loss experience would tell us to expect from a carrier. If I insure 100 people, this is what I would expect for loss, and therefore I'm pricing this way to be able to cover that loss. The most important priority for the state is that I'm there to pay your claim, that we don't get put into receivership. So they're going to validate that I've in fact priced it appropriately to make sure that your plan is in place 20 years, 40 years from now when you may actually need it. Then I have the option if things change. So the hardest thing to predict is mortality. 20 years ago, conditions that you had that would kill you now don't. But you don't necessarily live a longer life. Stroke is a great example. The fatality rate for stroke sufferers 20 years ago is dramatically different than it is now. What that means for me as an insurance carrier is the policy that I wrote 20 years ago, I priced for a mortality rate for stroke of this, and now that's changed, and now I'm paying claims on that stroke victim instead of what would have been a policy that didn't draw from my claims, my reserves on the policy. So what I have the option and the ability to do, and this has happened, and it's not popular, but what I have the ability to do is to go back to the state and say, look, loss experience changed because here's what's changed. Low interest rate environment. Morbidity or health, improvements in healthcare, et cetera, et cetera. What I need to do is to take your policy, and I don't know what you were paying, but let's just say you were paying $1,000 a year. She's been paying on this policy for 20 years at $1,000 a year. I need to raise those premiums to $1,500 a year, maybe $2,000 a year in order to be able to pay claims. But I would rather have her pay $2,000 a year and be there to pay that claim than to not be able to do that. And companies are doing that, and that there's been several rounds of rate increases on long-term care insurance premiums. And the states are policing it very aggressively. So what I would say is, short of an economic collapse, the amount of oversight as well as the pricing precision that we have is there to say that that life insurance company that's issuing those policies, the reserves that they have to retain and demonstrate and prove by annual state audits and every time that they submit a product for pricing, they have to prove that they're going to be there to pay those claims. And the commitment to the industry from the carriers that exist, the leaders in the industry, the Genworths, the John Hancocks, the Mutual of Omaha, the Northwesterns, Transamerica, et cetera, they're all very much committed to making sure that they're there for the long haul. Yes?
Medicaid and in long-term care. I mean, we know public policy is biased against private long-term care insurance. For one thing, even though you have the spin down with Medicaid, my understanding is there's just a huge exemption for your home. And in some states, I believe it's like $750,000.
Right.
So to me, there's really no incentive for people to purchase long-term care, private insurance. And also the tax treatment of the premiums is different. If I'm an employer and provide my employees health care, then I get special tax advantages. I get tax deductibility. But if you're an individual and you're purchasing health care, long-term care for yourself, then you can't deduct that unless your expenses are 9.5% of your income or more. So has there been any talk about allowing those expenses to be tax deductible?
There has, and I agree with you. So what I would say is part of the lack of understanding on Medicaid spend down. So where does Medicaid pay? If you have a private insurance policy, and this is where you have to make a decision as to how much control you want. So I know my policy, if I need care, I want to receive it in my home if I can. I don't have that option with Medicaid, typically. There's always ways around, but typically I don't have that option. So I have a lot more control by purchasing private insurance. So there certainly is an incentive, but it's around control versus financially. Yeah, I get to keep my house, and I get to keep a house, frankly, a very expensive house. In each state, that number changes a little bit. I get to keep a car, I get to keep a musical instrument. I mean, there's a number of assets that I get to keep. In most states, well, I just learned that Maine doesn't do it, but in most states, what they can do is put a lien on the house. So what happens is you spend down, you and I are married. You marry me for about 5 minutes here, 2 minutes maybe? We're married, I need care. We don't have any kind of a policy in place, so we spend it down. I die, you get to stay in the house. We don't have much for other assets, but you get to stay in the house, and as long as you're in the house, they won't touch it. As soon as you die, they'll exercise that lien. And so whenever the house is sold, they'll take out whatever they can, up to and including the full value of the house. Most states do that. Not all, but most. Right, right. Right, right. Yeah, because it seems pretty heartless. So there's certainly dimensions to that there is some incentive to do it, but not that I might experience in my lifetime, candidly. As far as tax deductibility, there's a lot of talk about it, and there has been some movement in that direction. So to your point, yeah, it's got to be 7.5 of your adjusted gross income for medical expenses, and then only an age-based limits. So the younger you are, the less of your premium actually applies.
And that has changed, I think, 9.5% under the new health care reform.
Yeah, so yeah, I'm not even sure it's in effect yet, or if it starts January 1 this year. But what we'd like to do is get full premiums deductible. One of the actions that they did do is they made tax-qualified long-term care insurance you can exchange from a product into it. So like an annuity or a life insurance contract, you can exchange into that from a non-qualified contract into your long-term care contract with no tax penalty for using those funding. So there is some tax advantage to it, but you've got to have those other vehicles in place already. The industry would very much like, and I honestly don't know why the government, why they haven't actually embraced. If you make it fully deductible, you would do a tremendous service for employers, for the state Medicaid programs, Medicare, and I think we'll get there, but it's contentious, and nobody can really give a good reason other than they'll make some political hay out of being either opposed to it or for it. But I agree with you, there is not enough incentive to do it.
So Jerry, I want to ask you an obtuse question.
Sure.
And then we'll wrap it up. But it seems to me that Medicaid programs would be incentivized to buy other people's long-term care insurance for them. It's got to cost the state less if they paid your premium for the last 30 years of your life. That's $30,000 in the example you gave versus the hundreds of thousands of dollars. So isn't there an incentive for states to provide long-term care insurance for residents?
Yes, there is. The problem is most states, and certainly the federal government, they operate on a 10-year budget. When you're trying to demonstrate why this is a financially feasible or viable solution, you've got to show that it pays off in 10 years. I don't know what the actual number is, but I know that typically a buyer buying long-term care insurance, it's more than 10 years before they make their claim. They may have a health event that would prevent them from qualifying somewhere down the road, but they still don't go on claim. But it's hard for the government to prove that within 10 years we recoup those losses. Until you get into a ongoing, I can see that expense, I'm still recouping it ongoing, but in the first 10 years it doesn't pay for itself. And so, again, the political quagmire, I'm not saying it's right, but I'm saying that's how the system works. The second piece to that is that there actually is consideration for pilot programs in certain states that they're talking about mandating people purchase private long-term care insurance. I don't know how you make that work. The argument they say is, I can make you buy auto insurance, so I should be able to make you buy long-term care insurance, but I also have the option not to drive my car. But there are states that are looking at it saying, I can't afford to care for you when you are sick. I need you to plan for it, so I need you to demonstrate either financial ability to pay to a certain extent, or you got to purchase insurance. And they're talking about that because the state Medicaid program can't afford to pay the premiums and the care that they're already paying.
Jerry, thank you very much. I really enjoyed that, and I hope everybody else did.
Thank you.
Do you have the clicker? Do you have the clicker? Well, I want to do a quick wrap-up. I don't know if I should come up there or ask you folks to come down here. Well, we covered a lot of ground today, and as I started out saying, and you should hear on WCSH tonight, the point of the conference was that it's time to take action. We've talked and we've talked and we've talked, and we just spent another day of talk, and it cost a lot of people a lot of money to take that time and do that. But we need to implement action. And I want to talk a little bit about what some of that action may be. Oh, you guys missed this one. You should take this slide for your presentations. My goodness. Okay. Defining the problem. So we didn't even touch on all of the problems today, and actually I think there's some that people haven't studied yet, which we need to be aware of. But the biggest problem is we need to start doing stuff. That's number one. And in order to do that, we need people who have an interest in doing that. Now the question is, who's going to do anything about anything? Now, and Judy Klinko talked about the Caregiver Training Institute in Tucson. It took people to be involved, to volunteer their time to actually go out and do that. So that's one of the things that we need. We need volunteers and people who are motivated. The motivation is everything. I'm here because I'm motivated to try to solve some of the issues because I'm tired personally of watching people study it and study it and study it. So we're not going to solve the workforce issue as easily as it may sound. There was, like I mentioned, the article in the paper that was published by the Maine Chamber and the MDF this week that said, oh, we're going to find 65,000 jobs. And Jessica LaChance from the Chamber was here earlier today, and she took exception to that since she was part of the producer of that report. But Maine has tried for a long time to come up with ways to create jobs and create attraction to Maine, and we haven't been very good at that. So what we need to do is stop doing what we've been doing and find some new solutions to things. And something like the Caregiver Training Institute, if we could become a leader in that process, we would attract people not only from Maine but from other states. So that's one of the things that MemoryWorks is going to talk about over the next months, years, whatever it takes, but we're hoping that we can do some action and at least get some community organization, some foundation, really build a fire under them to get some solutions going. One of the things, and Dr. Fazeli doesn't seem to be here at this point, but he and I talked earlier this year about why are we sending money out of state to do research on elder and dementia care issues when we have the eldest population in the nation. And so he and some fellow doctors have set aside a small fund to start researching. Why aren't we doing more research here in Maine where we have the most subjects? We've got all the test rabbits right here in Maine. We don't need any more. We don't need to send money outside of the state to do the work. So that's one possible solution. We also only have a limited number of people who are actually building new facilities, and there's going to be a huge need for more beds. And so we need to encourage either existing facilities to expand, or we need to address funding. And if we have to, maybe we should do it ourselves at MemoryWorks. Maybe we'll be the impetus to force other people to take action. I'm not sure on that, but if you haven't heard the statistic yet, we only have 40 geriatric physicians here in the state of Maine. And we need 80. Now, in 10 or 20 years, we're going to need double that. We're going to need 160. Most likely, unless things change, we'll still have 40 or less, depending on whether they retire or not. Somebody's got to do something with that. So we've got to address the elder care issues like that. Another issue that is obvious is the cost of health care. But factored into what you heard today is one piece that I think is missing, and I'd love to have Pam's take on this because she analyzes this stuff all the time. But when Jane Doe moves from a paycheck every week to a retirement check, one thing really important happens. A paycheck, you actually pay tax on for the most part. That's contributing to the state coffers, the federal coffers, maybe even the local coffers. When you go to retirement, especially if it's just Social Security, you probably don't pay a whole lot of tax on that. Or if you're getting some of the pension funds that you knew they were going to be tax-free, or at least they're lower, you're going to have lesser income than you had before you retired. So you're going to be contributing less taxes into a system which is going to have a growing demand to provide elder care. So they're going to be lower tax dollars, more elder care. Where are we going to get the money from? Jerry's got it. I know he does. And Dan, remember he said, go see Dan about all these questions? Well, no, I joke, but the fact is that that's an issue I don't know that has been studied. The tax.
Actually, I'll just say this: there have been a few wonderful economists who've done work on this, especially in Western Europe, or becoming like them. They are having a horrible reduction in their younger population, and they're having to support more older workers. In this country, it's estimated that by the year 2020, we'll have about 3 workers per retired person. And 50 years ago, we had about 40 workers per retired person. And what's of even greater concern, especially this year, I looked at some BLS data that had come out on unemployment, and the labor force participation rate for 18 to 64-year-olds is the lowest it's been in 35 years. That means that people who are able to work are not working. So that's a huge concern, and if we continue with this very stagnant economy, it's going to have a huge effect on the cost of our entitlement programs.
Thank you very much. So when I was a young real estate broker, somebody taught me into taking the Dale Carnegie course, which I highly recommend. But in that course, they talk about how do you solve problems. And the first thing that you do is you define the problem. Now, according to the number of studies we've done, we should have defined the problem by now. I'm not sure we have. These are the issues I think that we need to deal with, or at least some of the issues, and there are a lot. But what we need now is a different, out-of-the-box thinking. And we can either go and ask government to try to solve it, but you know they're going to have less money. Or we can go and knock on a new door, which is the business world. And what I need and would ask every single person here to do is to go back to anybody you know who works in the business field and say, you should have been there. You should have paid attention, because either the business world is going to do it itself, for itself, or the government's probably going to come along and say, you know, we'll just take more taxes. It's not going to go away by itself. We're talking billions of dollars just here in Maine on long-term care over the next 10 to 20 years. Billions and billions of dollars, which we don't have. And you saw the statistic that Jerry showed you with the long-term care being $250,000 a year. Our state just doesn't have that kind of money. So how are we going to solve that? We don't know yet, but we're about finding ways to take action where other people have not. So if you've got ideas, I want your ideas. I want your partnership. I want your outreach to be part of this. We need to do something as individuals and as an organization that other people who are in the industry, who understand the problem very well, have not yet been able to do. And there are a lot of other things we have on the table as an organization. Can't talk about them a whole lot yet, but there are some new models that are out there for dementia care that are probably more cost efficient. I like the idea of, you know, if we could buy long-term care insurance for $1,000 a year to pay for $500,000, $250,000 a year of care, I think that would be kind of neat. So what we're going to do over the next year or two is we're going to try to find solutions, and we'd love to have you as partners in that. And there are other groups who are trying to do so too. So, you know, just keep your eyes and ears open. We'll see what we can do. Please pay attention. I think most of you have gotten information from us recently, so you're on our mailing list. If not, you will be. But if you got ideas, please bring them forward. You know, we need every single idea on the table, and we're open to new suggestions and new ways of thinking. So those are the immediate problems, but this is not going to go away. Nothing that we said today is going to make this problem go away, but we do have some ideas. We can do what Lynn Peel and Nova Ewers do. We can do what Judy Klinko has done. We can do what Brenda Gallant has done, and try to find ways to help people navigate to better options for care, which often are more affordable options for care. But even more so, we've got a bigger problem. How do we deal with the older generation when they need care? Nobody's having that conversation. So this is the second piece of advice. Go talk to your elders, Go talk to the people, or talk to your kids. I can talk to my kids till I'm blue in the face. They just refuse to change diapers. So I've got to look somewhere else for elder care. But I didn't prepare. I haven't planned ahead. So Dan, you can't help me. So does anyone have any questions or concerns or ideas of where we can go, or it's an open ball field. Yes.
I think it starts with community action, and I would propose that people look into resilience circles. Those are a really good community-based sharing of resources, that neighbor-to-neighbor kind of thing, and also follow the habitat model. I think if we're looking for housing structures that are going to accommodate the influx of folks needing housing, there's all these schools, especially the Catholic schools, that are up and vacant now, that could be renovated through a program like Habitat. So Habitats for single-family homes, let's see if there's something that could be modified under that umbrella to address the housing issues. So I would say capitalize on what's already in place instead of trying to always find what's happening. Also at the state level, there are several programs. There's Mobilized Maine. There are, under the SWIB, the Statewide Investment Board, 5 different committees. If consolidated, that's Carrie's idea. I want to give her credit. If they were consolidated, it would address, all these think tanks that are coming together just like we did today, would galvanize the particular issues rather than segregating them, and then move that agenda forward. Get the legislators at those tables. They've segregated themselves under the workforce committee at the state legislature. They weren't going to the Mobilized Maine meetings. Now they are. They're not coming to Representative Hughes down in York County started something on older workers. He hasn't even been to the older worker committee meetings. So there's all this stuff. It's like, get people to come together at what's already in existence and capitalize on what's already in existence.
Women, work, and community. I had a hunch that women were probably going to solve this problem faster than us guys. But that's probably true. Any other questions or comments? Anne?
I like what Ruth is saying, and I think the old kind of town hall model, going around to village communities, to rural communities, and holding town halls, really speaking to elders. What do you want? They need to be asked. I mean, that's just honoring where they're at in that stage of their lives. And if they don't have a plan, talk about what that plan might look like. I mean, I think we need to talk to the population we're talking about rather than talk about them. And I think if they have a voice, there's huge talent and ability out there in the aging population. And I just think that's a treasure trove that we can draw on. So a town hall concept, something like that. I don't know how that could be managed, but it's a thought.
Yeah, I'll just share that in Tucson, 15 years ago, I started Neighborhood Cares program. It was called the Live at Home program. And it's been very successful. Neighbors volunteer to support their neighbors. They do mostly rides, and they also do friendly visiting, minor home repair. And the program has been very successful. We in our neighborhood, the program has been modeled now in 28 other neighborhoods in our community. And our program specifically in our neighborhood, we opted for having a paid part-time coordinator. And we raise the money, we do an antique and collectible sale, we do a flea market annually, and then we do a letter around the holidays to all of the neighbors. And we're able to bring in enough money to support and sustain the program. So again, looking towards the future, 15 years ago, I knew there wouldn't be enough resources for everyone to be cared for, and that we really need to look at how we can mobilize around caring for each other. Another initiative we have in Tucson that I'm involved with is called the Elder, we started off as an Elder Initiative, and now it's called the Elder Alliance. And we received money from our community foundation, and we received a $250,000 grant for 3 years. And what we're looking for is system change. And they're looking at a collective, so it had to be collaboration, true collaboration. And the community foundation came in, and they've done workshops with the organizations that have come together. And what we're doing is we've identified 3 neighborhoods in Tucson, and for the last 2 years we've been working in those neighborhoods, and we've hired a part-time mobilizer who lives in the neighborhood, who is working at the grassroots level, reaching out to older adults and supporting them and gaining their voice and actually determining what they want and how they want the social service organizations to respond to their needs so that they can continue to live at home independently. We just got funding for the year 4 and 5, and we're just going to be doing now a 4th neighborhood. So it's amazing to see one of the neighborhoods is, down at the county, demanding transportation. And although that's not happening at the moment, they're going to every single meeting and they have a presence there. And then one of the church organizations who are part of this collective now have a caravan that goes over the mountains twice a week to be able to pick people up and bring them into the city for grocery shopping. So things are possible, and I think really working at a grassroots level and realizing that there are community issues, are community opportunities, and that we really have to come together to make sure that we do the right thing for people who are aging today, and that those services will be there for us in the future.
Any other thoughts? Again, thank you all for being here. The fact that you're here right now, you can simply say to other people, oh, we have a raffle to give off. I'm going to pick it. No names on them or anything? Just oh, right here. Linda Greer. Oh, no kidding. Excellent. At the Homestead Home Care. Thank you all for coming. Like I said, if you can say to anybody that you were here and they should have been here, because there was a lot of really important stuff that was said today. So thank you again for coming. Another giveaway? Oh my goodness. Oh, I thought that was my gift? No? Linda Wyman, is she still here? She's not. Oh, good. Huh? Excellent. Thank you again.